Yeah.
That's kind of what we see with the POS systems is people's not paying them off early, but
Mhm.
the smart ISOs go back to them and start marketing them 3 to 4 months before the end of the term of the lease to
Right.
start them on something new.
Hey, everybody, James Shepard here with another edition of the Merchant Sales Podcast. On this week's episode, we're bringing an old topic back into the conversation, and that is leasing. Now, back in the old days, when I first got into the industry, I was leasing hypercom terminals and things like that. But in today's fast-moving payments ecosystem, we have a new problem we have to solve, and that is expensive point-of-sale hardware. And I think leasing needs to be part of that conversation. So, really, I found Robert recently, just a fantastic guy. I thought it'd be a great conversation to have, and I really think we cover a lot of different topics here in today's episode. So, without further ado, we'll jump into that interview. A couple of things I always like to clarify before we jump in. First of all, Robert and his company are not paid advertisers or consulting clients. Just a good conversation with somebody that I think has some expertise to share. Secondly, our sponsor for this podcast episode is Nativia. If you want to learn more about Nativia and what they have to offer for ISOs and agents, head over to nativia.com/CC Sales Pro. Nativia.com/CC Sales Pro. With that being said, let's dive into this interview and then we'll follow it up with Today in Payments. Hey, everybody, I'm here today with Robert Ensenminger. How are you doing today, Robert?
I'm doing great, James. How are you?
Doing fantastic. So Robert is CEO at Executech, is a leasing company, and we're going to be talking about lease financing today and how it's really evolved as point of sale systems and things like that have come along. So Robert, as we dive into this topic, give us a little bit of context about yourself. How did you get into this industry? How did you get into Executech? Give us a little bit of your story, if you would.
Sure. In 2006, I started in ISO, Alpine Payment Systems, and it was very successful. We really enjoyed it. We know a lot about what it's like to be in ISO. We know the challenges that people face, and one of the challenges that we had was just dealing with our lease company. It was
Mm,
hard to talk to somebody who could help us.
right,
It was hard to, it was just hard to when you're dealing with such a large company and they have so many clients, it's
right.
really, really hard to get the attention that you need.
Mm,
And so I decided to start our own lease brokerage in 2010, which is Executech Lease Group.
okay,
And for the purpose of solving the pains that we were experiencing, slow funding, we wanted to get funded, the same day.
right,
We just wanted to be able, primarily, we wanted to be able to have somebody who can help us,
right,
somebody who is there for us every time we call,
right.
instead of leaving endless emails and voicemails and stuff like that. It just was
Sure.
something that we thought we should do. And
Yeah.
in doing that, we started Executech Lease Group, and we started acquiring vendors and clients, and Executech Lease Group grew to what it is now, 15 years later.
Hmm.
I exited
That's
the ISO business, 3 or 4 years ago,
right.
and primarily focused on Executech Lease Group.
Well, that's cool. Yeah, that's what I was going to ask you. Is I assume you exited Alpine and then just like,
Yeah.
hey, Executech was able to stay around. That's really cool. So all right, I remember, of course, when I started in the industry about, I don't know, 17, 18 years ago, I was leasing terminals. That was kind of the way that everybody did it. Back then it was the very, very beginning of the free terminal stuff. Now, of course, we've seen this evolution because now it's like, a lot of point of sale deals where hardware costs have really kind of come back into the forefront. And so I'm just curious from your perspective, is leasing kind of resurging? Why is it becoming so much more popular again now with these larger purchases on POS equipment and things like that?
You're absolutely right. The free terminal thing came out, I don't know, 10 years ago, 14 years ago, or something like that.
Right.
And it did put a huge dent into the leasing thing because there was a different business model that a lot of people were adapting to. But now, we're funding ten to $40,000 leases now on a daily basis. So these leases are the needs of these merchants or stores are a lot different than just simply a credit card terminal. They need these
Right.
POS systems to actually run their business.
Yes.
And so there's a huge value for the merchant, and the cost of equipment isn't really a hindrance if they can lease it. If they
Yeah.
can put it onto a subscription type model, to where it's just a part of doing business.
Yeah.
And the ISOs out there are able to show all the different ways that they could get a huge return on their investment, not only from processing fees, but other things that it helps, as we all know, helps
Yeah.
in the business operation of the business.
Right, right. Yeah, I love it. So all right, let's zoom out for a minute here. I was thinking about it, and probably a lot of people in my audience don't even know what a lease is, or at least they don't, they may know what a car lease is, but they've never really experienced it in a hardware environment. So let's just take a $10,000 lease. So somebody's leasing, $10,000 worth of, maybe it's a two-station point of sale system with some kitchen printers and a kitchen display or whatever. How does it work? What is a lease? How does a $10,000 lease? What does the economics look like?
Well, the way a lease works is typically the ISOs will get a schedule of money factors based on A through E credit.
Hmm.
But typically, if you have somebody who has good credit, they would have a payment of somewhere around $285 a month over the course of 48 months. And basically, what the ISO would do is just take their payment and divide it by the money factor, and that will show them how much it will fund. A lot of these guys, when they're out there, they're really not actually selling the price of the equipment.
Hmm.
They're selling the payment,
Right,
and they
right.
know once we teach them how to figure out how much these payments will fund, they know if they're covered or not. And then
Yep.
it's just basically it's a question of how good their credit is. And if their credit's good, they make a lot more money. And if their credit's bad, they make less money, but they kind of know where their high payment and low payment range is when they're out there selling.
Right. So, and again, I guess maybe another way to ask this question too would be like, how is a lease different from, let's say, a regular loan that you would get to buy equipment, right? Like, what is the difference? What is a lease versus like more traditional financing?
Sure. Typical retail installment contract, it's just an annualized percentage rate over the term of however many months you want to finance it. And I think everybody knows how that works.
Right.
A lease is basically you're paying for the use of the equipment over a given period of time. But we're able to, in a week, we'll be able to offer not only fair market value leases, but $1 buyout leases as well.
Mm,
So a lease is kind of cool because you're paying for you're paying for the use of the equipment
right.
over time,
You're renting it really,
so to speak.
sort of.
Yeah.
Yeah.
But if you do the dollar buyout type lease, you're actually buying it. Okay.
Right.
But you
Right.
get the benefits of a lease or a subscription model, which is a 100% tax write-off. So
Mm,
you don't have to depreciate your equipment and get into complicated tax situations when you're leasing. It's just 100% write-off in cost of doing business. And
right.
so a lot of people like that. One of the good things about leasing versus with us anyway, leasing with us versus doing a retail installment contract through a bank is it's fast.
Right.
Our ISO's like really, really fast turnaround on everything. So they
Yeah.
go in there, they sign these people up, and they're hoping to be installed and funded in a couple days.
Right.
And that's what we do. And so the whole key is to be really, really fast. And a lot of time on retail installment contracts, you have to go through the bank. You go through the bank, they want all kinds of different things,
Right.
and it's a lot different. But leasing
Mm.
POS equipment right now is really, really easy and simple for our ISOs.
Sure. Okay, so let's talk about the ISO then. So they have this $10,000 lease, and meaning they need 10,000 in funding to fund the hardware. They go ahead and do the lease. The merchant's paying, roughly this 285 a month or whatever, it is depending on
Mhm.
the credit and all that. How does the ISO and agent make money? When do they make this money? How do they make this money? How, roughly how much do they make? Give us some context around that part of it.
Sure. Let's go back to your $10,000 example. Okay. Let's say that the cost of equipment to the ISO is $4,000. And so what happens is they deploy this equipment and what they send us the documents that it's deployed and they get funded the next day.
Mm,
And what will happen is they'll get funded $10,000 and their commission on that type of situation would be $6,000. A
right.
lot of times it's less. It just depends on, what the caps are on that specific type of equipment.
Right.
They don't get too crazy with that,
Right.
but
Right.
there is room to make a lot of money. And,
Right.
a lot of agents really depend on that upfront profit to grow their business so they can, in return, get their residuals built over time.
Mm. Yeah, good stuff. Yeah, I think it's so fascinating because it's like, there's so many different ways to leverage that type of financing. I mean, it's like I could see some ISOs going a little more towards like in that scenario, they're like, well, I'm actually gonna do a $5,000 lease or whatever because I'm gonna
Yeah,
make a lot of money on dual pricing. I want to give them a great deal on the hardware. And then I can see others kind of going, well, hold on a second. I'm actually, in this case, I'm not going to make a lot of money in the processing. I had to give them a good deal, but I want to make some money up front. So maybe the lease, they're able to mark up that hardware a little bit more to make some money. So a lot of different ways to skin that cat, I guess, right?
yeah, agreed. We see both. We see both.
Mhm.
We see lots of ISOs leasing the equipment for a very, very small margin, and they make it up on the residuals over time. And then
Yeah.
we see all three, all different variants, but
Yeah.
it just depends on the business model of the ISO.
Sure. Yeah, I love it. So are there deals that are not a good fit for leasing? What are some examples, maybe where you talk to agents and ISOs and say, let's avoid leasing in this particular situation. What would those situations be?
Not a whole lot of situations, but I was thinking about that, recently, and old tech, things that is on the end of life would not
Mm,
be a good idea to lease
right. They're gonna want to get
because
out
you
of
have a
it.
grip on that for a couple of years,
Right.
or used equipment. That's not a good idea to lease used equipment.
Sure.
Um, or even like seasonal merchants who maybe do like a summer fest every year or something like that. You don't want those guys paying a lease payment throughout the year because it doesn't make
They're not
sense for
using it
them to
throughout the
do
year.
that.
Right.
But
Yeah.
in a lot of cases, I mean, there's some stuff like that. There's some cases where it just doesn't make sense, you
Right.
know.
Right.
But for the average merchant who's doing business, 12 months a year,
Right.
and their ISO's providing them with cutting edge technology for today.
Right. Right.
That technology is going to last the lifespan of the lease, and at the end of the term of the lease, they can upgrade to whatever's new at that time.
Right. Love it. Well, that's a good segue into my next question, actually. So let's talk about a couple of things actually here. So, obviously technology is evolving really quickly. So, we're seeing things that are being used now, maybe in 2 years, they might need something different or whatever. How are ISOs handling kind of upgrades, things like that, especially when it's within the term of the lease? Just kind of curious if you have any insights on kind of just managing that hardware evolution when things come up, or even the other thing I was going to ask was even like, when the hardware goes bad, it needs to be replaced for another reason, an issue with the hardware or whatever. And it's like, well, technically that's not the merchant's hardware. It's they're really paying for the use of it. How are ISOs kind of handling that? I'm sure there's a lot of different ways, but I'm just kind of curious your insights on that.
Good questions. Normally, if something goes bad with the terminal, the ISO will take the terminal back or the POS system back, and
Hmm.
they'll replace it with whatever actually works, and they'll send it back to the manufacturer and get it replaced. That
Sure.
never really seems to be a problem. But going into the main portion of your question, let's say that you have somebody who's on a 4-year lease and they're 3 years into it, and they see a new POS system that does a couple other things that they really want to do.
Yeah.
um, they would have, it's exactly like a car lease. You just pay the remainder of your payments to get out of the lease and you lease something new. And what a lot of the ISOs are doing, if they go into something that maybe has 6 months left on their lease, they'll
Mm-hmm.
build those last six payments into the profit that they're making on the next lease
Mm-hmm.
to go ahead and pay that off for them. So
Right.
if you think about it, it's almost like trading a car that you leased in on another car. Okay.
Right.
99% of the time, people who are trading in leased cars have negative equity, and they just roll the negative equity into the new car. But
Right.
most people who lease cars like 3 or 4 years will just do it every 3 or 4 years,
Mhm.
and
Yeah.
that's kind of what we see with POS systems is people's not paying them off early, but
Hmm.
the smart ISOs go back to them and start marketing them 3 to 4 months before the end of the term of the lease to
Right.
start them on something new.
Yeah, that makes sense. Yeah, I was thinking about it too before this interview. I'm like, because my wife and I, we both lease our vehicles, and for me, it's like, yeah, every 3 years I go over at least whatever the newest next one is, and because I don't want to have the pain in the neck of dealing with it, the ownership of it, and even though I know it's not always the absolute best financial deal, it's easy, it's done, it's over with, and I move on to the next thing of the day. And so
Me
I think,
too.
yeah, so I think probably merchants are, especially with these big point of sale systems, they have enough on their plate without trying to figure out how they're going to finance it. And so I think obviously, we have there's players in the market that are doing, either free hardware that they're making money off the SaaS and the payments margin to offset, or They're doing, hardware as a service or whatever. So there's other models out there, but I think leasing, like I said, it's become a pretty strong option. I feel like in the market for these big POS deals. It's such a good way to it's such a good way for the ISO to have flexibility. I feel like the ISOs need these different programs. So when they're doing different deals, sometimes you need to be able to do a lease because it's just not going to make sense to do it any other way, you know?
True. I would say that, when I started Alpine Payment Systems back in 2006, if I didn't have leasing as part of my business plan, it never would have grown into the company it became.
Right, right.
Because that lease revenue for me gave me the money that I needed to build a good,
Yeah.
successful company.
Hmm.
And so a lot of people, everybody has their own business model, but a lot of people build this lease income into their business model so they can build a sustainable company that will provide them with huge residuals in the future.
Yeah,
So
absolutely.
it kind of helps.
Yeah, it's a way to kind of have your cake and eat it too. You can make the money up front and you can build the residuals long term, and yeah, it can be really nice. A couple of questions I have for you. One was, obviously when we think about leasing, one of the things I feel like there was two things that kind of made leasing go downhill a little bit in the terminal market. And you alluded to this earlier with a previous partner that you worked with, was that a lot of the early leasing companies, let's just face it, maybe they didn't have the best reputation. So they had some issues with the customer service, they had some issues with the way they were handling things financially, et cetera, et cetera. You know more about that than I do. So I'm curious, when you look at Executech, obviously you want it to have a fantastic, reputation and all that. What have you done at your company to kind of change the narrative a little bit when it comes to leasing and make sure people understand, hey, we're dealing with a legitimate company here that's not gonna give us a bad rap in the market that we're in.
It's an excellent question because you're right. And in the whole leasing and the leasing within the merchant services industry has had a negative connotation over the years, and I think it's because a lot of people out there, commit a lot of fraud. I
Yeah,
mean, let's face it. And
yeah,
I can say it doesn't any of the fraud issues that's happened in the past, it doesn't come from the lease company. It comes from what's coming in from the street. And so what
mm,
we've done is we go into a heavy vetting process.
mm,
We make sure whomever we're dealing with is very, very well rounded. We go in and make sure they're financially sound. We do a bit of a background check. We check the references. We check with the processing company and make sure that they're actually the person that they say they are.
yeah,
So we've gone, and every year we get a little deeper into our verification. But I think we're at the point now where we can't even do anything more than we're doing. I mean, we're digging deep.
right, sure,
And the same that and so basically what happens, another thing that we do on our verifications is we make sure that the actual merchant knows how to use their equipment.
right,
We call them to make sure it's installed, to make sure that they
mm,
understand the terms of the lease, to make sure they understand it's non-cancelable, to make sure they understand
right,
how long it is, and to make sure that they understand that any promises that were made on, their merchant service rates have nothing to do with their lease payment, and those types of things. But
right,
but
right,
when we do that, we don't do it in a way that really causes any risk for the deal to fall apart if it's a
right,
good deal. The
right,
only
right,
time it would fall apart is if they've been lied to, you
yeah.
know. So we make sure that the merchant knows what they're getting into, but at the same time, we try to protect our ISOs. Our number one goal is really to help the ISOs grow their business and to be able to do
Yeah.
it in a quick, easy, efficient way.
Yeah, good stuff. Well, I know that a lot of people in my audience are going to want to know more about this. I think there's a lot of connections I have that, frankly, just kind of took the leasing out of their business model a long time ago. But now I'm talking to them and they are facing these challenges of how do we finance these larger deals. So before I let you go today, I'd love for you to share quickly, like, is there a certain, size of ISO or type of ISO or agent or whatever that you're looking for to partner with? And then for those who are maybe the right fit, where would you send them to learn more about what you have to offer?
Okay, thanks for asking that, James. First of all, I mean, we don't mind partnering with somebody who's starting out.
Okay.
Actually, I like it because I mean, somebody gave Alpine a chance when we first started too,
Sure.
and so I like to be able to help coach them on building their business into something that they can hang their hat on because, knowledge is power, and we do have the experience from being an ISO in the past to help these guys get going. and kind of coach them through how to marry the leasing process into their whole business model.
Hmm.
And so we deal with everybody from the guy who's just getting started, from the ISOs who are leasing 100 leases a month, you know.
Hmm.
And so we're wide scope on that. You know, the process, so to speak, is, you know, the candidate would fill out a ISO application. ISO application would come to us. We would vet that person, and then we would go ahead and send them, you know, what rates they qualify for, et cetera. And then after we agree up on that, they would get a vendor code, and then we would basically, when they go out and they market their services, they sell their payment, they fill out a simple application for the lease. That's a two-page document, and submit it to us. And the process is really quick from that point on. All we do is get that. We go ahead and do all the vetting on everything for them. They deploy their equipment. We verify that it's installed and the merchant understands what's going on, and they're funded the next morning.
Yeah.
So that's a real easy, simple, quick process. If somebody wanted to apply with us, they could go to www.elgleasing.com, Executech Lease Group, elgleasing.com, and just click apply now. And you can put your name and your phone number and email in there, and I'll get back with you and we can talk about, you know, if this works for you. And we'll do everything we can to help everybody.
I love it.
Or
Good
you can
stuff.
email me at robert@elgleasing.com, either or.
Awesome. Robert, thank you so much. This has been really insightful. I'm glad that we got to connect. I know we haven't talked about leasing for such a long time on the podcast, so I really was excited to get you on here and just kind of talk about the evolution of it and where it's at today. But I think it's a fantastic option for, again, these larger deals, especially where it's like, man, we got to have that capital. So thanks for jumping on and sharing your expertise with us. Really appreciate it.
I appreciate you. Thank you for inviting us, and I hope to see you later, James. It's nice meeting you.
Of course.
So the Strawhecker Group in the ETA just published their sixth annual consumer holiday spending survey,
Okay.
and there were some key takeaways for acquirers, processors, and their sales partners. One of the ones that I thought was pretty key was the need to customize solutions to address merchant needs, and you have to bear in mind that these needs are going to differ by geography. For example, you know, merchants in rural areas. Okay, whereas merchants and urban shoppers, let's put it this
Mhm.
way, urban shoppers, even though you live in Altoona, which isn't exactly urban,
No.
are, you know, really enamored with tap to pay, digital wallets, and buy
Right.
now, pay later.
Sure.
Whereas those in rural areas are better served by customer loyalty solutions,
Mm,
you know, especially smaller merchants.
sure.
And then there was another interesting thing here, which was better than half, 54% of rural consumers said they prefer to shop with small businesses whenever they can.
Mm,
I
yeah.
thought that was interesting as
Yeah, that
well.
is. Hmm.
You know, a couple other points that the two organizations came up with was promote security features for merchants as well as consumers to ensure safe, compliant transactions.
Mm,
They found that 1 in 3 consumers that they surveyed would be most comfortable using newer payment technologies if they knew they had better security features than the older ones.
right. Right.
And another interesting tidbit, roughly half of consumers surveyed said they plan to spend roughly the same amount of money that they spent last year, and about 15% said they plan to spend more.
Oh, well. Okay.
Which I thought that was kind of interesting, given sort of all the economic uncertainty and
Hmm.
everything, you know.
Yeah.
Um, and again, back to the small business, even on the urban side and the suburban side, nearly half of consumers surveyed, 48%, said they try to stay local and loyal, you know, loyal to their small businesses. 38% said they would be swayed to shop at a small business if their preferred payment method and checkout features were available, which is
Mm,
kind of a no-brainer, but still, it
right.
it it it, it you know illustrates the need to sell these new payment methods even to
Yeah.
the small guys in,
Mm,
you know, where I am and where you are.
right. Right.
Also this week, PayPal released its 2025 holiday shopping survey.
Okay.
And there was a really interesting piece of information that came out of that. 77%, nearly 8 out of 10 consumers, are planning to use AI to help them shop this year, which underscores the need for merchants
Wow.
to optimize their visibility,
Yeah,
right?
for sure.
I mean,
Wow,
there's a
that's so
real,
interesting.
that I thought was one of the most interesting stats I came across this week. Why do they use them? About 1 in 3 to find the best deals, 3 in 10 to compare products, and about 1 in 4 are just looking for gift recommendations.
Mm,
That would be me. I
of
get
course.
so,
Yep.
I don't I see my nieces and nephews maybe once a year, and they're all adults now. So like, what do you get? What do you get a gym teacher, right?
Right.
What do
Exactly.
you get an engineer?
Yeah.
I mean,
Yeah.
those are the kind of jobs my nieces and nephews have these days. So
Yeah. Hmm.
here's another interesting little tidbit was PayPal found a resurgence of in-store shopping plans. 64% of shoppers said they plan to shop in-store this holiday season.
Hmm.
41% plan to shop both online and in-store.
Hmm. Wow. It's a lot.
I would have expected that to be sort of switched around.
Right. Right.
64%, online and in store, but it's sort of one of the senses that I got from it when I was reading it was that it kind of is like a rebirth of the concept of omni-channel.
Right. Yes.
You
Yep.
know, I
Yeah.
I
You really
think
need to have both.
you really do. You can't get by with just one anymore.
Hmm. Very interesting. Yeah.
Yeah, I thought so. So here's next up. PayPal and Mastercard are both leaning into AI. Um, PayPal, in fact, is making a whole lot of news. They have a partnership with MasterCard to integrate MasterCard Agent Pay, the card company's agentic payments platform, into the PayPal wallet.
Hmm.
Agent Pay, in case our listeners aren't familiar, it uses tokenization capabilities to power solutions like mobile contactless payments, secure card on file so that they can deliver secure, personalized payment experiences. That's
Hmm.
the way MasterCard describes it.
Right.
But it really, to me, this deal highlights how agentic commerce, where AI agents act on behalf of shoppers to find and purchase products, is really redefining e-commerce.
Yeah. Well, I think AI in general is redefining. I mean, what was the number you said a minute ago? 7 in 10 we're looking to use AI to help them with
Yep.
shopping or something like that. I mean,
Right.
what's
Yeah.
the number that I think will be really interesting is in, let's say, 2 or 3 years when it's like 1 in 10 is not planning to shop. They're just planning to let the AI know who they're shopping for, and the
What they're
AI will go
shopping
buy
for.
it.
and
Um,
and
you know.
that's a really good possibility, especially younger people.
Hmm.
The other
Yeah.
thing that PayPal did this week, announced this week, was a partnership with OpenAI, which of course is a company behind ChatGTP,
Hmm.
that will allow ChatGTP users to make purchases directly through the PayPal platform without ever going off the ChatGPT. GTP. That's a tongue twister to
It's
me.
GPT. Yeah, you're getting it though.
Yeah, I know. See how cute. It's like, yeah, GTP, right? Without going, without having to get off. You're just sitting
Right.
there
Right.
like, oh, okay, yeah, that looks great. Get me
Yep.
that pair of shoes.
Right.
You know.
Right. Yeah, this is tricky stuff. I mean, the payments landscape, it's a little tricky to be able to say, I'm going to give my AI the ability to use my money. And
Right,
so there's just a lot that goes into that. I think there's just so many interesting things that are going to happen. I think the fraud part is really interesting. I think the idea of, it's almost like, Patty, there's going to be this rush, and it's really interesting. I was actually in a meeting today. Like, we're going to roll out for Stackably, we're rolling out the marketing stack here in about a month, where we already have like website creation and all that through CC
right,
Storage. So
right,
I have a little division that builds websites. So now we're going to add in like social media management and marketing and stuff, right? So we're putting all that together. And one of the things we're talking a lot about is, with the website stuff, we have the SEO package, right? Well, we're going to really soon need to also have the AI package, because
right,
it's almost like another scramble. I mean, I remember the days where everything was about SEO. It was like, man, you've got to make it your website
right,
so that the search engines rank you higher.
right,
Well,
right,
how do you build a website so that the AI agent is more likely to buy something from your website? And I think I think what's going to be really interesting here, Patty, that a lot of people are not appreciating is this is going to be like a tectonic shift in terms of commerce because
Oh, yes.
I can tell you what's going to happen initially. What's going to happen initially is that Amazon and Walmart are going to get a big chunk of the business from OpenAI and from ChatGPT because they're going to make it, built for AI. And
Right.
OpenAI is going to be so nervous about allowing their AI agent to go buy from some random website. And how do they know for sure that their AI agent bought the right thing? What's the guarantee? Right. So,
Or what's the guarantee that it's a legitimate merchant that is not just,
yes,
some
that
phantom
you're going to
merchant
get
that
your
was put up there?
right. And so I think what's going to happen is there's going to be this whole kind of rush. Um, I personally think there's going to be a whole other tech suite that's going to come out from OpenAI and these other companies. But, in other words, to like verify your site and things like that.
Right.
But, this is a big, big deal because if AI is going to be going out and making purchases, then the online businesses are going to need to know, well, how do I make sure that my website is coming up as a
Mm-hmm.
viable merchant that an AI can purchase from? And they need to
Right.
be able to, accept the right forms of payment. They need to have everything optimized. They need to have whatever this validation is going to be. So there's going to be a lot of conversations around commerce and payments coming up in the next few months for sure.
Oh,
In
I
the
agree.
next
I
year
agree.
especially.
Yeah, and I think that, the important thing for agents and ISOs to remember is that, they need to be helping merchants,
Yep.
get recognized.
Yes.
And, also, tying merchants in with things like manufacturer funded offers, right?
Mm,
Um, and of course, as you know, least cost routing is going to become an important thing as well.
right. Right.
And these are where areas where the ISO and the agent can be helping the merchant. But I just did, maybe a month ago, I did sort of for the green sheet, the nightmare of AI. I mean, I'd done some coverage about,
Yeah.
agentic, but sort of what you were just talking about. How do we know that it's a legitimate website? And how do we know that, um, you know, somebody hasn't gone in and managed the AI engine
Right.
to line their own pockets. I
Right.
mean, there's
Well,
all kinds of possibilities.
there is. The way I look at it, Patty, is there's going to be two driving forces that are going to be almost competing against each other in this growth. The first one is going to be a balanced, um, you know, free market, meaning,
Hmm.
the Congress is not going to be pleased when they find out that 97% of commerce went over Amazon and Walmart. They're going to be like, wait a minute,
No,
you're leaving small businesses out. They're going to tell OpenAI you're not allowed, you legally can't do that, right? They're going to, but then that same Congress is going to say, hey, all these customers are reporting fraud that your AI agent bought something and they never got it.
yeah,
Well,
yeah,
these two things are at odds with each other. And so because, it's like, well, if you're going to buy from all these
yeah.
smaller online merchants, you run the risk of fraud. So there's going to be a very interesting debate, I think, around commerce over the next year that's going to relate to that.
If we just if Congress ever goes back in session,
Well, right. Right. You got to give a whole, we got to open the government first. Then we'll see
gotta
if,
open up the legislature. Then we can
right.
talk
Then we can
about
see if
this
we can
stuff.
solve something. So, but it
Right,
will be a
right.
very interesting time, I think, on all the e-commerce stuff.
Yeah, I agree. I agree. So finally, my last news item for this week, Early Warning Services, which is the banking consortium that owns and operates Zelle, the
Hmm.
P2P network, is taking the network global and using stablecoins to support faster, more reliable cross-border money movement.
Mm,
As we've discussed, and everybody probably knows by now, stablecoins are the most traded digital currency out there, and they're pegged to a fiat currency like the dollar or the euro.
hmm. Yep.
Um, Artemis, which is an analytics platform for blockchain data, puts the current supply of stablecoins at a value of $300 billion, up from $10 billion just 5 years ago.
Mm. Wow.
And I think a lot of that is because, we had the Genius Act. That was one of the things Congress did
Right.
before it went on its extended vacation.
Yeah.
Um, in August, $122 billion in stablecoin payments were settled.
Mm.
So the 300 billion is just the value of stablecoins out there.
Right.
About a third of that, though, was used to pay for things.
Yeah. So in other words, unlike Bitcoin, stable coins are not being held. There's no reason to hold them in reserve. They're being
Right,
used as currency.
right, right.
Yeah.
So just to put into perspective, in addition to the 7 big banks that own early warning, Zelle is offered by more than 2,300 U.S. banks and credit unions.
Hmm.
And earlier this year, the company had some transaction milestones. For the first 6 months of 2025, Zelle said it saw double-digit growth. Total dollar value was up. It put dollar value at $600 billion,
Hmm.
which is a 23% increase over 2024.
Hmm.
And the total number of payments to small businesses jumped 31% to 180 million.
180 million. Okay.
180 million payments to small businesses
Oh,
using
180 million payments or 180 million in
payments.
volume.
No, 180 million
Payments
payments
to small businesses.
to
Wow, that's a
small
lot.
businesses using
Okay.
Zelle. That was a lot. I
Wow.
thought that was really
Yeah.
a lot.
But
Yeah.
you know, isn't it interesting though? So just backing up for 1 second. So I'm trying to unpack those stats for a minute. So you were talking about stable coins, and I
Mm-hmm.
think you said what was it? Stable coins did 100 and something billion
122 billion in payments
in
were
what period of
settled
time?
in August.
So 1 month.
1 month.
Zelle, which has been around for quite a while, backed by all
Right.
the major banks,
Right.
did 600
600
billion for the
billion
year,
for the half year.
for the half year. So literally, stablecoin based on that number, roughly,
Right.
stablecoin has already eclipsed Zelle,
Yep.
and it really wasn't mainstream 18 months ago, really.
No, it wasn't even mainstream 8 months ago.
Right.
I
So
mean,
that's very interesting.
yeah, I think that's really interesting. And I think that it's a big reason why early warning is getting into stablecoins.
Yep, absolutely.
Yeah.
Wow, very interesting stuff, Patty.
Well, that's it for this week, James.
All righty. Well, Patty, as always, thank you so much for sharing your insights. We always appreciate
Uh,
it.
Thank you for being able to help me drill down to the nut of it all.
Yeah, well, always enjoy it. Thanks again, Patty.
Thank you. Take care.